There are a handful of private companies that can raise the cost of a nation's debt by billions with a single letter. They do not lend money and they do not govern anything. They simply issue an opinion, a grade, a few letters like triple A or double B. And yet when they lower that grade on a country, that country can suddenly find it more expensive to borrow, its currency wobbling, its finance minister on the phone. They grade companies and cities and entire governments, and most of the world has quietly agreed to take their homework as truth. This is a series about the companies that run the world and the rivals they left behind. Today it is the credit rating agencies, and above all the two giants that dominate them, Standard & Poor's and Moody's. And this is, in some ways, the purest example of a strange kind of power on this whole list. The power that comes not from owning anything or building anything, but simply from being the referee that everyone has agreed to trust. Let me explain what they actually do, because it is deceptively simple. When a company or a government wants to borrow money, it usually does so by issuing a bond, essentially a promise to pay the money back with interest. But a lender on the other side of the world has no way to know whether that promise is any good. They cannot investigate every borrower themselves, so they outsource the judgment. They look at the grade, the rating stamped on that bond by one of these agencies. That single grade shapes how much interest the borrower must pay. And the scale of that trust is enormous. A tiny number of firms rate the overwhelming majority of the world's debt. Standard & Poor's and Moody's together dominate the market, with a third firm, Fitch, some way behind, forming what everyone calls the Big Three. Between them, they sit in judgment over tens of trillions of dollars of bonds. Their opinions are woven into the machinery of global finance so deeply that they have almost stopped feeling like opinions at all. Which raises the natural puzzle. In a business this powerful and this profitable, there are only three of them, and no ambitious rival has ever simply built a better, fairer agency and taken the crown. And the reason reveals the real and quite unusual source of their power. It is not just reputation. It is that they have been, in effect, written into the law. Here is what that means. For decades, regulators around the world made rules that said, in essence, certain large, careful institutions like pension funds and banks may only hold bonds that are rated highly by an officially recognized rating agency. The intention was sensible, to keep such institutions safe, but the effect was extraordinary. It made a good rating from one of these specific, blessed firms not just useful but legally necessary for a borrower who wanted to reach the biggest pools of money in the world. Think about the fortress that builds. If the law itself effectively requires a rating from your small club, then no borrower can afford to ignore you, and no newcomer can easily compete, because the newcomer's ratings do not carry that same official blessing. The Big Three were not merely trusted by the market. They were, in a sense, granted a license by the state to be trusted, and that license is almost impossible for a rival to obtain. It is a moat dug not by the company, but by the regulator. But there is a second feature of this business so strange that when people first hear it, they often assume they have misunderstood. Who pays the agencies for their ratings? You might assume it is the investors, the ones relying on the grade to be honest. But for the most part, it is not. It is the borrower. The very company or government being judged is the one that pays the agency to judge it. The party hoping for a good grade is the party writing the check. Now, the agencies argue with some fairness that their entire value is their reputation for accuracy, and that they would never risk it by inflating grades for a paying client. And most of the time, the system works well enough. But it does not take a cynic to see the tension buried inside it. And on one catastrophic occasion, that tension did not just show, it helped set the world on fire. In the years before 2008, the agencies handed out their highest, safest, AAA grades to vast quantities of complex mortgage securities, products stuffed, it turned out, with fragile and often worthless home loans. Investors around the world trusted those pristine grades and bought. When the loans collapsed, so did the securities, and so did much of the global financial system. The referees everyone trusted had, on the most important call in a generation, been catastrophically, ruinously wrong. And yet, here is the quietly astonishing part, the part that tells you how deep this kind of power runs. After a disaster of that scale, you might expect the big three to be swept away, or broken up, or replaced. They were not. They paid fines, they endured furious hearings, and then, within a few years, they were back to rating the world's debt as dominant and as profitable as ever. Because the deep truth had not changed. The law still pointed at them, and the world still had no agreed alternative to turn to. So consider the rivals. Beyond Fitch, the perennial third, there are smaller, newer agencies, names like Morningstar's DBRS or Kroll, genuinely trying to compete, sometimes with keener models. But they remain small, precisely because of that regulatory moat and the sheer inertia of global trust. To dislodge the big three, you would not just need to be better. You would need to persuade the entire financial system and its regulators to agree on someone new all at once. That kind of coordination almost never happens. So the uncomfortable question this series keeps returning to has a particularly sharp edge here. Is it wise that the creditworthiness of companies and entire nations rests on the judgment of 2 or 3 private firms that are paid by the very entities they grade, and that were catastrophically wrong at the worst possible moment, and yet remain firmly in place? It is a concentration of quiet power that survived the closest thing to a death sentence a company can receive. And that is the deeper lesson, in perhaps its most unsettling form. The most durable power is not always earned purely in the market. Sometimes it is the power to be the officially trusted judge, a role so woven into law and habit that even being spectacularly wrong cannot dislodge you. These companies never lend a dollar or build a thing. They simply grade the promises of everyone else, and a world that could not agree on anyone better keeps on, year after year, taking their letters as law.